Dambisa, welcome to the Peter Schiff Show.
Thank you very much. I'm glad to be here.
Thanks for coming on. So first of all, the premise of your book, Winner Take All, the race for resources. Do you think that the winner is going to get everything?
Well, look, the fact of the matter is commodities are a finite, in fact, scarce and depleting resource. And in that sense, you could argue that there's a zero-sum game. If China has a copper mine in Peru, it effectively means nobody else can own the assets. So there is an element of this idea of competition going on, and the fact that China has decided to approach this in a very multilateral way by building relationships across the world, I do think that's put her in a sort of pole position in this race for resource.
Although certainly, I mean, resources are finite in one sense, but in another sense, they're not, in that you can always come up with new ways to, cultivate or harvest resources that you didn't know before. And so you could certainly create resources that, maybe now we don't even realize they exist because we don't even know how to get to them, or we don't even appreciate it. I mean, you've got people now talking about trying to mine asteroids. I mean, I don't know if that's going to be feasible or not, but assuming we can, I mean, obviously we can expand our universe of resources as technology makes it possible.
Yeah, you know what? I look, the sort of Malthusian view would fall into that space, in the sense that Thomas Malthus was basically talking about resource scarcity, but he had no idea that we would have a better technology, and in fact had no idea that the population would skyrocket to where we are today, with 7 billion people on the planet, 9 billion more expected, to be on the planet, not more, but 9 billion in total by 2050. But I think the cautionary tale of my book, Winner Take All, is really that if we look at different resources today, they are depleting. We are today living off of the oil discoveries that were made in the 1950s. There's a lot of euphoria around shale and fracking and so on, but the environmental challenges are enormous, and they make me feel slightly nervous about whether or not we will see an energy reprieve. And one of my favorite examples, if you look at the Tupi oil field off coast Brazil, there's been a lot of discussion about how they found over 100 billion barrels of oil. Well, the fact of the matter is, if you speak to people who are in the energy space, we've known about that energy for many, many decades. And even now, with that knowledge and with the technology that we have, we're simply not able to break through the 2 miles of salt that exist between the surface of the ocean and being able to access those resources. And by the way, it would also cost you over $500 billion to even try and think about it. So I think that yes, we do hold out hope for technology, and I believe in innovation and R&D, and would suggest that the United States in particular might be more interested in diverting military spending towards more R&D and innovation. But I do also think that it's probably not going to offer the biggest reprieve, certainly not in the next decade.
Yeah, your book, you're looking at China and talking about diverting spending. I mean, China obviously is making inroads. They're looking to accumulate resources, not only the resources, but some of the distribution channels. Why don't they stop buying U.S. Treasuries? I mean, why don't they divert some of the money that's going into U.S. Treasuries into resources? And in fact, why don't they let their own currency appreciate in value so that those resources become less expensive for them and they have a stronger currency with which to bid for scarce resources?
Well, you know what? I think we tend to look at China specifically, but also the emerging markets more generally, in a very Western lens. Discounted cash flows. Why are they overpaying for assets? If an asset is on a discounted cash flow basis is supposed to be 100 million, why is China paying 5 times as much? And I think this is an example. The resource market is an example of where we see China's behavior perhaps not fitting into our model of thinking. China, in my mind, and from my experience in the conversations I've had with many of their policymakers and business people, they are very focused on building symbiotic relationships. They are interested in providing cash and trade and investment, and in return getting access to the most important resource that a country has. has. In a place like Africa, it might be land. In South America, it might be copper. But in the United States, the most important resource is the consumer. And by their system of providing loans through Treasury bills to the United States, they have gotten access to the U.S. consumer. So I think it's a very different lens.
Yeah, but the problem is the only thing access to the U.S. consumer gets them is more treasuries. And so the pile just gets bigger and bigger and bigger. We can ponder that. We got a little break, and we'll be right back and continue this discussion. So don't go anywhere. Hey, we actually have a Harvard grad with us, not an MBA, but a master's in economics, had a PhD to boot from Oxford. It's Dambisa Moyo, who's talking about her new book, Winner Take All, China's Race for Resources and What It Means for You. And, Dambisa, you said something interesting towards the end of the last segment that I wanted to, get your comment on. You mentioned that China seems willing to overpay for resources, maybe 5 times what we would think the asset was worth. What if China has a different approach? What if China realizes that they're paying with dollars that they believe are vastly overvalued due to their own props, and that maybe when China pulls the plug on the dollar, they think the dollar might lose 90% of its value? And so if they buy something for 5 times what you think it's worth, if they're paying with dollars, they maybe are buying it for half price.
Well, that's a very interesting scenario. I mean, by the way, just for clarity, I said 5 times. I mean, it could be anything else. It could be less than that, it could be more than that. I was just throwing out a number. But I think your more fundamental point is probably a right one, that they are diversifying into real assets. And just picking up on something you said just before we went to break, you look at the comment that you made about the Chinese buying US Treasuries. I mean, frankly, I think that their stock of US Treasuries is a small price to pay for all the job creation and the export market that they developed and improving living standards in their own country. And I think it's a very similar lens with which they're pursuing these their resource acquisitions around the world.
Well, I don't know that it's a small price, first of all, because there's over $2 trillion in treasuries that they basically money that they flush down the toilet. But you can make the same argument, it's a small price for Germany to pay to support Greece. I don't think that the jobs that China has are a function of them selling what they produce or giving what they produce to us. I think China would have had all the jobs without us. They just would have the goods as well as the jobs, which is, after all, what jobs are all about. I mean, they would have the work, but they would also have the enjoyment of the fruits of their labor. The deal they got now is they get the labor and Americans get the fruits, and I don't think that's a good deal for the Chinese.
Well, you say that. I mean, I think that the perspective I would take is quite different. I mean, I think that they are operating under state capitalism. I mean, you say that they haven't got the goods. Well, you know what? They're sitting on a large pile of foreign reserves. A lot of that, you're right, has been going into the dollars, but I think it's changing very dramatically. I do think that the commodity space is one of the ways that they're diversifying, and also that they are moving towards more domestic demand, and they are trying to grow their domestic sector. So I'm very optimistic that they won't, or they certainly are not going to be relying on sort of this U.S. trade as their sort of way to survive.
I think they're gradually figuring this out, and we've been reliant on China. I don't think it's the other way around. I don't think they actually need us. But ponder this for a minute as you're looking at resources and China's demand. Imagine if the Chinese do allow their currency to rise, and you do get a big increase in domestic demand as the value of Chinese wages increases dramatically due to the enhanced value of the RMB. What do you think that's going to do to global commodity demand if all the Chinese who are riding bicycles suddenly find out that they can afford automobiles? If suddenly they can afford to buy washing machines and dishwashers and refrigerators and new furniture, what happens to commodity prices when you have a much bigger middle class in China than you have in America?
Well, this is the sort of essence of my book. I mean, we've run numbers on this, and I can give you a few examples. Let's take the car example that you've just given me. First of all, we know that there are 1.3 billion people in China. So only 300 million live like us. So they've got 1 billion people who are living in relative poverty. But that's not stopping the Chinese government from providing a floor for those living standards, and they are very aggressively trying to move that. But let me take the case of cars. In the United States, the ratio is about for every 1,000 people, there's about 800 cars. In China, for every 1,000 people, there are only 75 cars. If the ratio in China converged to the ratio in the United States, we're talking about the Chinese needing an additional 900 million cars, which is going to be about 1 billion tons of steel, an additional 35 million barrels of oil per day. I mean, it's just a significant amount of pressure on resources that simply don't exist. And so you can imagine I'm very, very bullish on commodity prices.
Yeah, although I can tell you that one of the things that's going to happen is a lot of our cars, our used cars, are going to end up in China because we're going to export those cars to the Chinese because we're not going to need those cars anymore. We're going to need food. And so we'll have to sell our cars to eat.
You say that, but, first of all, the largest German car manufacturing plant for BMW is now situated in China. And so it may be the case that as these economies get more wealthy, you will see that they won't want to drive secondhand bangers from the United States. They actually want to buy new cars which are being produced at home.
Oh, they will. But what about teenagers getting their first car? I mean, everybody doesn't get a new car. So Americans will be selling their cars to Chinese teenagers who will use them to go to the beach, But Americans are going to be using those Chinese bicycles.
or you might be importing cars from China. Which, by the way, as you know, in Canada, they already have a laptop for pork scheme where the Canadians are importing laptops from China and in return sending pork to China. So there are
I don't think we're going to be importing a lot of anything. We're going to be exporting. I mean, we're too broke from all the imports we've already put on a credit card. So unfortunately, America is going to have to start figuring out how to export stuff and go without stuff because we've lived for so long beyond our means. It's like the opposite of China. You have a situation where you have all these people that are working hard but living in poverty. And in America, you have all these people that are hardly working but living in affluence. That is going to have to change.
Yeah, I absolutely agree with that. And, we have, unfortunately, not much time to get into more detail, I would imagine, about what exactly happened. But clearly, in the United States, productivity is ropey. Across Europe, productivity is horrendous. And these are the markets where you would hope you would have better improvements in the labor dynamics. And I think that there's been far too much consumption on the back of all the borrowing that has occurred. And that's very obvious. We've discussed that, on numerous occasions. But I think fundamentally you are right. The United States needs to really change the structure of the economy very dramatically so that it does become a serious export, and I don't know whether that's going to happen.
Yeah. Now, when you were looking at resource demand in China and you were looking at probably industrial materials, agriculture, did you look at precious metals? Did you look at gold and how maybe China might be setting itself up for a gold-backed renminbi or going to a gold standard rather than a dollar standard or just a fiat money?
Yes, I have looked at that, and I've also looked at a number of other resources. But let me just very quickly tell you some of the data that I think is quite interesting. In terms of gold, we already know that China and other emerging economies, well, certainly know it with a small k, are very interested in moving away from being heavily dependent on the institutions such as the World Bank and IMF, and also being increasingly delinked from the dollar. Their exposures to Europe had over time increased. I mean, obviously that's being challenged now with the crisis there. But gold obviously offers them a huge reprieve, and the Chinese are on a spree to buy not just gold assets, but also copper gold assets, because very often now around the world you find that many of the gold assets have copper, and many of the copper assets have increasingly evidence of gold. My other favorite metal is copper. I think that is one of the opportunities in the market is that China is short copper, and if you look at where the countries where copper actually does exist, Chile, Zambia, Congo, these places many times have a lot of volatility in terms of political uncertainty, but also the terrain is much more difficult. And I think that China, unsurprisingly, we know that China has been going very aggressively for those resources.
And China then expands its influence globally. I mean, it's getting into deals and with all what America is doing is we're just using our military, but China is actually engaging in commerce and developing resources and seeing its global influence increase as a result of that.
Absolutely. China gives the people what they want. You know, we have populations in Africa, in the Middle East, in South America. 60% of the population's under the age of 24. They need jobs, they need trade, they need investment. And the fact of the matter is China's willing to engage in that capacity. They're not interested in charity, and they're absolutely not interested in pity. They need to stave off the sort of Arab Spring political uncertainty that we've seen. And the only way to do that is by creating jobs and improving people's livelihoods. And China offers that.
Yeah, and to me, I don't understand what is preventing them from recognizing that the one thing that's standing in the way of even a greater role for China in the global economy and higher standards of living for its own people is their currency peg, is their desire to prop up the U.S. economy at the expense of their own. I mean, think of it. You say it's a small price. You're talking trillions of dollars. Imagine if China had that money to invest productively in its own economies, and imagine if Chinese citizens could enjoy the enhanced purchasing power that would come from a stronger RMB.
Well, I'll tell you, I think, as you know, that what you just said is on its way. They do have, aside from the $2 trillion that they have lent to the U.S., they also have $3 trillion additional in other resources, capital resources that we talked about here. I actually am very optimistic that we're not dealing with a bunch of buffoons. The Chinese government are very smart. If I were to take a bet, I would say that the currency will.
Well, I'm sure they're a lot smarter than the U.S. government or some of these European governments. But on the optimistic note, I got to let you go. Hey, real bit of pleasure having you on the show. Good luck.